G'day, Marianne Elliott from 360 Mortgage Solutions. So today I wanted to jump on and share with you the 6 steps you need to take as a self-employed client before you start your home buying journey. So the step 1, first thing you need to do is tidy up your tax returns. Making sure that you have the most recent 2 years tax returns is ideal. Some lenders will take outside of that, but let's go ideal scenario. You have your 2 years most recent tax returns. And when I say most recent, I'm not talking about from 4 years ago. I'm talking about from last financial year. The other thing that's really important is to make sure you're separating out your personal expenses from your work expenses. So particularly when I'm doing an application, we will go through your monthly living expenses, and if all your expenses are in the one account, all banged in together, it can be really hard and time consuming to work out what's a business expense, what's a personal expense. And look, I'm sure your accountant would be having the same conversation with you, but certainly when it comes to applying for a loan, it's much easier for the bank to see what is your living expense if it's all in a separate personal account rather than all intertwined together. So be mindful of that as well. The third thing you need to be doing is building your deposit. So obviously, it's really important and tempting to put more money back into the business. But if you're wanting to get into your first home, especially being self-employed, the more cash deposit you can put in, the better it will be. It means the less you need to borrow, but the less risk for the lender as well. So the more cash savings you can get, the better it's going to be. The fourth thing you need to do is choosing your structure. And again, this would come into play with your accountant more so, but choosing your structure very carefully, whether you're a sole trader or a company, but being mindful of when these shifts and changes might take place. An application where there hasn't been a change in structure of the company is a lot simpler than when there is a change. So be mindful of that as well. Minimizing your debts is definitely a tip that I can give you, whether it's within the business or outside of the business. If you can minimize your debts, it means you've got more cash flow for the repayments of the new home loan, which makes your borrowing capacity stronger, but also gives you a little bit of confidence and reprieve to know that you can afford those loan repayments because you don't have multiple other debts coming out all at the same time. And finally, the sixth biggest tip I can give you if you're a self-employed person wanting to get into your first home is to talk to a broker early. The earlier you talk to a broker, the better. And it may be a case of in 2 years' time, I want to get my first home, so I'm going to talk to the broker today to see what we need to be doing and where we need to be at in 2 years' time. That is absolutely perfect. If you're coming and talking to a broker because you want to buy a property in 2 weeks' time and you're self-employed, it's often too late to make any changes or tweaks along the way by that point. So your borrowing capacity is your borrowing capacity, your structure is your structure, and we as brokers are working around lenders' policies to find not what's the best lender for you, but what lender will fit your current what lender's policy will fit your current situation. Whereas if you're speaking to a broker years and years prior, you already know what you need to do to be at the right stage so that you can pick the lender rather than picking a lender based on their policy. So the key takeaway there is the right advice by a mortgage broker and a really good accountant is vital when you're self-employed. So if you don't have a really good broker on hand or a really good accountant, make sure you get one. That's it from me, guys. Otherwise, have a great day and I'll catch you in next week's video.